Let's move on and talk about gold once again. Gold is down almost $40 today on the heels of that better than expected jobs report. Next guest said gold could hit $5,000 in the near future, so is he placing his bet still on the bullion? He, of course, is Peter Schiff, author of Crash Point 2.0 and president of Euro Pacific Capital. He joins us for Bull Market or BS. Now, Peter, we know what your call is going to be when it comes to bull market or BS. Here for gold, is this your buying opportunity? Or if you were on the sidelines and you are a believer that, yes, gold will trend higher over the long term, but there is a steeper pullback as your entry point to come?
Well, I don't know if it's a steeper pullback. We were down over $50 actually today, but all it did is take us back to where we were last Friday. We're well above 1,000. I mean, we're still well above 1,100. Certainly, gold could pull back a little bit more, but I don't think it has a lot of downside from here. I think it has much more upside, and if people have been on the sidelines watching this bull market, they should try to take advantage of this pullback. I'm sure it's not going to be the last pullback, but, you know, the next significant pullback might come from much, much higher levels than this.
In terms of the dollar trade, Peter, today we saw a fairly sharp move higher in the dollar index. Do you think that this move was exacerbated by a short squeeze?
Well, certainly. You know, whenever you have a bull market in the case of gold or a bear market in the dollar, the biggest days, individual days, are usually counter-trend days. So in a bull market, you have more violent down moves. In a bear market, you have more violent up moves. And that's what we're having. I think people are overreacting to the economic data. You know, there was no good news in this jobs report. The unemployment range shrank a little bit. It's still 10%, but the reason it contracted is because the labor force contracted. Some people gave up looking for work. You know, if you look at the real unemployment.
Wait, but Peter, hold on, Peter. The total unemployment rate did go down month over month. I mean, it went down to 17.2. So doesn't that capture what you talked about, the people who leave, who are discouraged?
You know, but the labor pool did shrink. You know, so and more important than that, we lost 45,000 or so manufacturing jobs. The jobs we gained were in retail, in healthcare. So we have fewer people making things, but more people are going to try to buy things with their stimulus-related paychecks. So it means bigger trade deficits. It means more inflation. It means the underlying economic imbalances are still worsening. And all of that is very bearish for the economy and very bullish for gold.
Wait, it's Karen. You're saying so manufacturing jobs isn't that people making things for others to buy as well?
Yes, we lost those jobs. We lost another 45,000 manufacturing. We need more manufacturing. We need to make stuff. Unfortunately, the phony jobs that are being created by the trillions of dollars of deficit spending are in the service sector. And those jobs are going to disappear as soon as the Fed starts to tighten again, which is why they're not going to do it. You know, people look at this and they think, aha, the economy is improving, so the Fed is going to withdraw the stimulus. It can't withdraw the stimulus or we lose all these phony jobs. Now, you know, we need to withdraw the stimulus. The market hasn't figured that out yet.
Wait. You're saying they can't withdraw the stimulus? They should, but they won't, but they can't?
Yeah, because
Are you confused?
Remember, the recession is actually part of the cure. By trying to fight off the recession, the government is exacerbating the disease because it's resisting the cure. We have a lot of people employed in areas where they really shouldn't be. The economy needs to restructure, but the government, through the Federal Reserve and its policies, is preventing that restructuring from taking place. And by doing that, they're exacerbating our problems, and they're setting the economy up for a much bigger collapse down the road. And I think maybe a year or two from now, we're really going to pay the price for this reckless policy that we're pursuing now.
Hey, Pete, I ask you to put your trading hat on real quick. In terms of like American Barrack, for the viewers of our show, if they're long that stock down 9% on a day like today, what would you tell them to do? Is this the dip they should be buying, or would you look for further downside in a name like this? I mean, what would you be doing right now on Monday?
Well, I own the stock personally. I have a lot of money in it. I started buying it in 1999. I own a lot of it because I owned also Homestake. I owned Plutonic. I owned a lot of companies that Barrack merged with. So for long-term holders, this is a hiccup. I mean, you can't even notice it. If you just happened to buy Barrack Gold a couple of days ago and now you're down on the trade, I mean, I wouldn't worry about it. I think you're still going to make money. Maybe you could look for a point to average into the position to get a better price. But, you know, this is a hiccup in a bull market. You don't get these big type of down moves in bear markets. They happen in bull markets. You know, bull markets climb a wall of worry. They try to shake out the speculators and the scared money and the guys that come, you know, later to the trade, and that's what's happening. So,
Peter, what sort of time frame are you talking about when you say this is just a hiccup and you're looking for something like a bear to recover? What sort of time frame are you talking about? A week, a month, a couple of months, or further out than that?
I wouldn't be surprised. Remember, last Friday, when gold opened down about $35 a day after Thanksgiving, within a few days, it made a new record high. So we've had these big drops. As I said, I've been buying gold and gold stocks for 10 years. I've seen plenty of these big dips, and I bought them, and it's been profitable. But I don't know whether this is going to be a one-day event or a one-week event or something bigger. There was a lot of buying coming in. You guys said there was no buying. Look at the last hour. There was buying in the last hour. We trended up the entire last hour for gold and gold stocks. We did not close on the lows. I would not be surprised to see new highs next week, but if we don't, they will come, and I think the smart money is not selling gold, but the smart money is still buying it.
All right, Peter, thanks so much for your time. We do appreciate it.